All right, guys. Honestly, we're here, but dude, I got this big ass monitor, this big old monitor, and for some reason, it just didn't feel like connecting to my computer. I had to restart my computer, like replug it in, do a whole bunch of stuff here, but we did get it working. And now we are streaming. Let me make sure we got all this good. Yeah, this should be good. Okay, yeah, now we're streaming the FOMC Minutes report. Let me know how the sound is. We should be pretty good. I'm going to get some charts up here. I just got to like re-log into them all now. At this point, the Fed Minutes report drops at 2 p.m. Eastern Standard Time. We're going to break down all of it here. So we'll put this up. The FOMC Minutes report will be broken down live. Here, let me, I can either scroll this, broken down live on the stream starting at 2 p.m. There we go, that's good. We'll put this up at the big top of the screen here. Try to make this flat. Yeah, it's pretty flat. All right, there we go. We got the charts coming up here, chat. Bear with me. Hey, what's up, Kay? All right, good. As long as you can hear me, we should be good to go. Let me make sure my headphones are on too. Again, we're here. We're ready. We got 200 people here. And we got our charts popping up. Yeah, lower myself here, make myself a little bit smaller. Where's gold at? Let me get my headphones up on this PC too. All right, Bitcoin. Oh, yeah. All right, here's gold. Let's put the NASDAQ up, the QQQ at least. We'll put the NASDAQ. NASDAQ, another red day in the books here, but pretty choppy. I don't know if the market's just kind of waiting for the Fed Minutes report to happen or what. Yeah, let me get a countdown timer going live here as well. We got about 21 and a half minutes left, or about 21 minutes left exactly. Yep. Or no, I'm sorry, 41 minutes is what I should have said. No, we got about 40 minutes and a couple seconds left. Yeah, I'm going to schedule the timer to go off about 10 seconds before. Yeah, there we go. So we got about 40 minutes left. We'll put the timer up. Let me get the headphones that I'm currently using connected to this thing. How do I do this? Don't I hold the play button? There we go. All right, now we should be good to go. Yep. Let me back out of this now. Yep, and let me get some music going. All right, so the FOMC Minutes report is a big report, basically, because we've been reacting pretty negatively to economic data here, to be honest, man. Let me know if you can hear the music. You should be able to now. It might be too low. All right, there we go. Let's do a poll. If you got to 1500 and then 1590, they should allow that as a pass taker. Usually, if it's in a $100 to $200 range, for me at least, they usually allow it to pass. But you know, I would just leave it, see what happens at the end of the day. They might send you a congratulations, you're funded email at the end of the day. If you made 1500 one day and then 1590 the next, you should hit it, I would say, you know. Hey guys, something I can take notes with. The market's not really crashing, it's just dipping. Why did this drop happen? Look at gold, Bitcoin, the NASDAQ. Let's see the news that recently showed up here. Let me see. New York Fed RRP on demand bond auction. I don't see anything really. Johnson & Johnson bond auctions. Non-farm payrolls coming out this Friday. Some political stuff. Yeah, so today, remember guys, let me put this up on the bottom of the screen. Today the FOMC Minutes report comes live. Remember, this is not a Jerome. This is not a Powell. Speech. This is a breakdown / reaction to last FOMC. Alright. Alright, so we're going to put this up big. Maybe this is a little bit too large. Alright. Alright, this should be pretty good. There we go. Let me know how that works. That should be... Hey, what's up, Trick? Powell talking about... Yeah, so remember, this is not a FOMC meeting. Okay, so this is the schedule. Alright, so every 6 weeks, the Federal Reserve meets and makes their rate decision. The next Federal Reserve rate decision and meeting and accompanying press conference is at the end of this month in January. Now, after the Federal Reserve meets, the last one was mid to late December. After they meet, 3 weeks later, we get an economic report titled the Fed Minutes Report, the FOMC Minutes. It's technically titled like the FOMC Meeting Minutes Report. It's essentially a reaction / breakdown with a little bit more foresight into what we might do the next meeting. It kind of breaks down why we did what we did in the last meeting. You know, the logic, the economic stance, the economic predictions, the outlook. And outlook is probably the most important aspect of this report. And so what we're going to do is we're going to break this entire report down as soon as it drops live on the stream. We're going to cover all of it as soon as it happens. We're going to use AI and summarize it in an understandable way, specifically focusing on the outlook, because in my opinion, the outlook is the most important, especially this week when we've got like a lot of stuff going down. We've got economic reports. We've got payroll numbers. Today we had the non-farm employment change data, the prelim NFP data. We had jobless claims numbers, and the market's closed tomorrow, but Friday we have non-farm payrolls and unemployment data, which is a really important release. So we'll see what happens. It's a interesting week for sure. Yeah, y'all hit that like button, hit the subscribe button. We appreciate it. Thanks so much. I don't know whether I should trade now or what, but what do you guys think? I think I'm down on like $10. I'm basically flat right now. The market's very flat as well. We might day trade a little bit leading into this, but the market's kind of flat right now. We're in a big range. And we're going to try to go green on the day here. All right, we're also in one trade right now that we just took a little bit of profit on. We got one contract here. Trying to go green on the day. I'll throw this chart up for now. Now we're kind of flat. I'm kind of shorting into this level. I'll take 2 contracts if I need to here if we can get higher. I like this resistance level. Reward target's going to be down here at 350. We've already locked in a little bit of profit. So, and I will add one more to this up here. Oof, you don't like to see it. Although it's a pretty small day. I do like that rejection, but we'll see how deep it goes. Okay. All right, we just took half off there, locked in a little bit more, and I'm going to go ahead and cut the rest there. So now we should be green on the day after that last trade. The last trade we just made about 25 bucks or so, so we're now green on the day. I'll take it. We'll pull this back up if we decide to trade anymore. This marks our, let's see how many green days we have had in a row. 4 green days in a row. Well, sure, if you want gold, there's the gold, guys. They're back. Correct, Spencer. That's correct. He said, they're dropping a news report today, but there's no speech. That is correct. It is a reaction report, 12-page document, really based off of the last FOMC meeting that happened. I think it was like December 18th or something like that. It might have been the 16th. When was the last Fed meeting? Last Fed meeting was the 18th, December 18th. So you see the minutes report on the right side here. The next one will drop right here as the minutes from this report, if that makes sense. So that is what we are looking at today, is the minutes report from the last Fed meeting. Still got 30 minutes left until this thing drops. Ooh. Yeah, Bitcoin all the way down at 92,745 today, and then back up. So if there's a justification for this. Bitcoin Depot expands BTM's network through partnership with prominent Texas convenience store chain. Bexback offers 100K leverage. Is there any reason why Bitcoin dropped this much, or was this just a broad market drop? I see this here in the NASDAQ. Is there any reason for this? Let's see. Okay, Wall Street was kind of quiet this morning. By midday, major indices were a little moved. Yeah, they're waiting for the Fed's future policy direction. One of the president-elect spoke on CNN, reported his team is considering a, quote, economic emergency plan that would bypass Congress to expedite the use of broad-based tariffs, end quote. Gold up a little bit today, but down still over the last 30-40 minutes. Nobody knows if we're going to go up, down, or sideways from this meeting. Nobody knows. The meeting starts at 2 p.m. There's a timer in the top left corner of the screen. I have an open position, so I close it. I'm not sure. I don't know what. Sometimes we get a big reaction to the Fed minutes report. Sometimes we don't. And so I really don't know what we're going to get today. Nobody does. I don't have a crystal ball. I would assume that the Fed is going to be a little bit more hawkish in their tone because they want to pause rates next month or at the end of this month. If we look at the Fed watch tool here to try to gauge, what we're going to do here, still 95 to 5% chance likelihood of a rate pause. So it's very improbable that we're going to cut rates this month. You can kind of see we're at 5% likelihood. But I think the reason this report's relevant is because we will get, we'll get some type of outlook into what we might do in the future for this year. And I think the market might respond to that in some ways here. In some ways. We'll see. We did have a green day. We ended up green. I should have stayed in that short too. What a beautiful short. Remember, we shorted around this level right here, and look at that thing, man. That thing worked perfectly. I like watching my levels. My level trades are getting more and more reasonable. So yeah, kind of building the system over the last month, and it's been going well. We're just at the point in time where we're gonna start scaling up our size, but for now we're okay. John, can you call SPY and Bitcoin and tell them that they get their ish together? Thanks, appreciate you. Top 3 phone calls ever. Yeah. Let me call Warren Buffett. I'll see if he can figure it out. Hopefully recession soon. I don't know, man. I'm not really pushing for that. Yeah, that's possible, Vanessa. That's possible for sure. Oh yeah, I mean my thoughts on SPY and Bitcoin is that, or SPY and Q, is that we're down. We're dropping for the last couple weeks, but at the same time, like, here's a SPY trend that we've been in since April, and I think we're still in it. I think we've actually confirmed it even more now. Like, look at these bottoming levels. So I think we've been in this range for a minute now. And there's the Nasdaq at 21,350. So we're watching that, but yeah, I think 580s support level on the SPY. We'll see if it holds. We're at 588s now, but long-term trend is there still. But wait, if it breaks, maybe we'll have some opportunity. Man, look at that level we called on Top Step X here, man. Look at that level. It was literally right there at 398s. We rejected directly off of that spot, like literally right off of it. And we are now green on the day. You see my little green rectangle up there? Can you see it? There it is. We are now green on the day. 4th green day in a row. We'll take it. Got another question. I'm not sure. It's whatever you want to do, brother. Regarding withdrawals, that's all preference based. I can't really tell you what to do there. Depends on your goal. There's the SPY at 588s. Whatever happened to trade trades? I don't know what happened to that guy. He a lot of those guys that were covering just AMC GameStop and were telling everybody they were going to rule the world with AMC and GameStop, and again, I like Trey, to be honest. I didn't have anything against him necessarily, but like a lot of those guys, AMC GameStop don't really move like that anymore, and so they just ran out of stuff to talk about, I think. And GameStop's been a little bit heating up a little bit more than normal lately, but yeah. All right, guys. So we got 25 minutes left, a little bit over that, about 23 and a half technically. Still waiting for the Fed minutes report to go live. We'll put, a little bit more charts up here. We are up on Top Step today. I hope we can continue it, keep it moving here. Let's see. Let me throw this up there. Big V-shaped pattern here on the NASDAQ. Look at that. About 700 here. Will the FOMC affect markets? Maybe. Maybe. You have a market prediction for Fed minutes? Not really. I think the Fed's going to be hawkish, and I think the market wants dovish, personally. I think they want the market to be dovish. And I think we've seen negative reactions to stronger economic data over the past 3 days straight, right? So an example of this is we've seen negative reactions to a higher than expected JOLTS report. We've seen negative reactions to higher than expected ISM services PMI. We've seen negative reactions to jobless claims numbers being lower than expected. And so most of the economic data signals weaker reactions, right, over a strong economy. And that means that I think the market wants rate cuts. Another thing that we could also be having bearish response for is an example of this is after the CES event with NVIDIA here, we had a very strong reaction on the upside. So here's NVIDIA. After the CES event, we had this big upward movement in the days leading up to it. And then the following morning after CES happened at 8:30 the night before. The next day, we just dumped down here. So I don't know if this is from JOLTS or if this is from profit taking from NVIDIA and other tech stocks being up in sympathy or what. But we had a big correction here. You can kind of see that big drop right there. And so maybe we're up in just sympathy profit taking. NVIDIA is still at over 140. It's not really in a bad spot. It's been pretty sideways now for, honestly, months and months. NVIDIA hasn't really moved, to be honest, since July, June, where it made some big strides earlier in 2024. And now it's just kind of been stuck between 125 and 150 for months and months and months now. And that does influence the rest of the market, the indices market, all that stuff. So we'll have to wait and see if we get anything good now. Check Discord. Yeah, I saw the thing about quiet mode leading up to it. Yeah, I did see that. Yeah, we got about 700, 800. Oh, we got almost 800 people here. What's up, chat? John, you have any insight on bank and financial institution earnings next week? I'm just watching them. I think the market's still due for a little bit more of a correction, at least sometime this year. I don't know when it's going to be, but I'm watching this earnings season for it. The biggest day that I have on my radar coming up is the end of this month. I think it's January 30th. We have Tesla earnings and the Fed meeting. So Tesla earnings, Fed meeting, both same day. And that's in the season weeks of earnings season this year. That's a big, I'm watching the next 3 weeks basically. That really, it's the next month and a half because NVIDIA earnings are usually a little bit later. I think NVIDIA earnings are mid-February, I think. NVIDIA earnings usually a little bit later. Yeah, NVIDIA earnings February 19th. And so we got some stuff happening. But yeah, I'm watching the next month and a half basically for big swings in markets on the upside or downside really. Hey, thank you, Win Bella. Appreciate it. Top 3 hardest working ever trader. Yeah, definitely top 4-ish. When ends the meaning? the duration is 1 hour, or read these big yellow letters at the top of the screen, kind sir. Look, let me do you a favor here. Look, I got you, bro. Read this right here. Okay, remember, it drops at 2 p.m. It's not a Powell speech. It's a breakdown / reaction to the last FOMC meeting. All right? Understand that. This is not a press conference. This is not a Powell speech. This is a reaction or kind of breakdown, summarization / future outlook report based off of the last Fed meeting is what this is. All right? So that's what that is. So again, I'm going to say it again for everybody at home. This is not a Fed meeting. This is not a Fed meeting. This is a summarization / outlook of the last Fed meeting. Like, we're looking at the outlook first. We're going to summarize using AI and break it fully down, and we're going to watch the market reaction as well. This is what we're going to do here. Yeah, I see the V. Powell does not speak today. That's not accurate. Powell does not speak. I don't know when Powell speaks again. He probably speaks during. Yeah, Waller spoke today. The whole market's closed tomorrow, but we do have Bowman speaking in the afternoon tomorrow. I don't know when the next time the 29th is the Fed meeting. The 29th is the Fed meeting. Again, I don't know when Powell speaks again. I'm looking at the schedule here. I don't really see anything. But when Powell speaks, they usually kind of pops up. So Powell will do something called the semi-annual monetary policy report to Congress. Usually the first one, though, is in like March. So I don't know when he's going to speak outside of FOMC meeting. That's mean, year. Come on now, bro. Powell, Big Papa. All right. 17 minutes, about 20 minutes left. A little bit over that, a little bit under that, I mean. All right, here we go. Are you bullish or bearish? I haven't done a poll yet. Let me do the poll. Hey, Yair, my guy. Thanks for the $50 donation. Shout out to Yair. Is it Yair or Yair? You know, I know Yair Rodriguez in the UFC. And so I'm used to saying it like Yair. But let me know if I'm wrong. Thank you so much for the $50 donation. That's probably the biggest donation we've gotten in a couple weeks. So, hey, thank you, sir. I appreciate it. Thanks. Shout out to Yair, my guy. Thanks so much, man. I appreciate it. It's a big donation, bro. With that said, Yair, are you bullish or bearish today on this Fed Minutes report? Vassal with the $20 donation, bro. Wow. Shout out to Vassal. Y'all are battling with each other. I appreciate it. Thanks so much. Shout out to both of you guys with the big donations, man. Thanks so much. Yeah, I know. That's what I said in a few weeks. I did get a couple $100. Yep, domino effect. Thanks, Vassal. Thanks, Yair. Appreciate it, guys. Is there no idea answer? What, Rob? What are you talking about, bro? What was it? What did you ask? Let me look back on the chat. Market tanked last time JP spoke. Yeah, the market did fall in the last Fed meeting that was on December 18th. So the market did tank. It dropped like what, like 4 or 5%, 3%, something like that. Oh, to the poll. Yeah, we're pretty split down the middle. Nobody really knows, but we're 50-50 basically, 49-51 out of about 350 votes so far. So, yeah. And the Bull King, yeah. Yeah. All right, guys. Honestly, we drew this resistance line, bro. I've been really developing this system that's mostly based around levels, and it's actually really simple of a system. Like it's really simple. I look at major levels, and I look for gaps in major levels, right? And longer term levels. When I say longer term, I mean over the last like week. When I have a good risk reward level, like an example would be shorting here with a risk level of this, or maybe up here, right? Here's my risk. There's my risk. Terrible drawing here. Here's my drawing. With a reward target of this as reward, you know? That's a good example of the type of trade. Using levels and attacking those type of levels with good risk reward and highly probable moves. And it's been working really well. Again, we're on our 4-day green streak in a row. I have to make a video about it on what I'm doing, how I'm using it. But yeah, it's been going fairly well. Listen, we got 13 minutes left. Got about 1,500 viewers right now. Thanks so much, chat, for joining me today. Hit the subscribe button as well, guys. Shout out to all the subs. Appreciate it. Thanks so much. Hit the subscribe button. I don't know what this music is. This is just the lo-fi hip-hop. It doesn't seem very low, though. Lo-fi. Seems a little hyper to me, but that's all right, I guess. You guys like this music or no? Let me know yes or no in chat. Yes if you like it. No if you don't. I can switch it to a little bit more chill music if you guys want me to. So let me know. All right, here, let's check it out. See, mi amigo. Yes, gold, not bad. Yes. So y'all like this music? Okay, we got one no. Auto Antics says no. Top 3 DJs in the world right now. Honestly, a really close friend of mine used to call me Jukebox Johnny because I was a good DJ. Not like an actual like DJ, but like more so I played good music, right? She used to call me Jukebox Johnny. And she still calls me that occasionally. Shout out to my friend Kelly. Hope she's doing good. But yeah. Switch to funk. I don't even know. Let me see what kind of funk music they have here. All right, guys. Hey, we got 10 minutes left until the Fed minutes report. 10 minutes. And again, we're going to use AI to fully break it down. Let me see. Funk. All right, you ready, guys? Honestly, I should have taken this risk reward trade. Somebody asked me to put on funk music. I feel like Napoleon Dynamite right now. You know? What do you think, guys? SPY or equal weighted Rs? I don't know. There is no Fed meeting today, guys. Do the bird hands like Napoleon. I don't know which one he did. Like, I don't know. I can't do it. I'm sorry. I can't. Look, it's not that I dislike it. I just can't help laughing if I hear this right now. So... So we're going to switch it back. Hold on, wait. There we go. Heard Palantir was underweight. Yeah, it's 2 p.m. Eastern Standard Time. So we got 8 minutes left. Chat, 8 minutes. Usually when it dumps before FOMC, it goes up. If it was a regular FOMC meeting, maybe. Right now, we're just sideways range. We're big range here. Remember, we shorted right here. We should have held that thing too, man. That risk-reward idea that we just gave out, look at that. Went right down to this level. This would have been our reward target too. Here's the 200 exponential, which kind of gives a little bit more confirmation in it as well. But again, today, guys, just to restate this, today, the FOMC Minutes report goes live at 2 p.m. This is not a Fed meeting. This is not a Powell speech. This is a breakdown / reaction to the last FOMC meeting. And we are going to break it down fully, fast, in its entirety, as well as cover the market reaction. We're going to use AI to summarize the most important parts, specifically the outlook. And the outlook is really the most important part, in my opinion. And so be ready. We will be covering this live as soon as it happens in about 6.5 to 7 minutes. So be ready, chat. Be ready. Yeah. Let's do this. We are breaking down. We're at 21.3s now. 21.3s. There's no meeting. Correct. This is a Fed minute. This is a report. It's the Fed minutes report, the FOMC minutes report. Just scream, this is Sparta. Hey, you can watch FOMC. You can watch the old one today, but it's not coming on right now. The next Fed meeting, the next actual meeting is going to be January 29th. And we will cover it, but it's January 29th. Shout out to the 2 big donations we got. We got $70 in donations today. Shout out to Yair Carrillo as well as Vassal. Thank you guys. I appreciate it. Friends, thank you so much. Appreciate the donations. All right, we got 2,000 people here. We still got 6 minutes or so left until this drops. About 6 minutes. Market's on a downturn, although we're pretty freaking flat right now. I mean, look at this. Down, up, down, up, down, up, down. What a shocking turn of events. Now we're down. We got basically a big rectangle here. Yeah, and maybe we'll break out of this from the Fed meeting. I'm not sure. But, yeah, will it pump after the report? I'm not sure. Nobody knows. You got a 50-50 shot, though, and so I'm sure some guru's going to act like they know and then get it right because they got a 50-50 chance and then act like there's some genius from it. That'll probably happen, but I'm not going to speculate on it because I don't freaking know. My guess is they're going to be hawkish, and I don't think the market likes hawkish necessarily, but it doesn't always mean the market moves down. What I really think is that we'll have kind of an underwhelming reaction to this one since we're going to pause, and that's pretty probable, and we're ahead of payroll data and stuff like that. So I think we're probably just going to have a very muted reaction to this report is what I think. But we'll see. Let me know what you guys think. I'm looking at some of my most recent subscribers. I got a pretty big subscriber called Lou Fitness. Shout out to her. I've got Gyro Gerald. Shout out to Gyro Gerald. He seems like a helicopter guy. And then we've got some other guy, Isan Bai 2.0. So shout out to him as well. Thanks for the subscribers, guys. We've also got Travel with Marty, Health Sciences, and more. So thanks so much for the thanks so much for the subscribes, Chad. I appreciate it. Those are my largest subscriber followers currently, so thanks so much. Or in the last when was this, 90 days, so shout out to them. What's up, Matitude? All right, chat, we got 4 minutes left. 4 minutes. No Fed meeting. FOMC minutes report. based off of the last Fed meeting. So it's a reaction to the last Fed meeting is what it is. How can I become a member? You hit the join button. That's all you really got to do, brother. $6 move is no action. $6 in what? $6 in the NQ is nothing. Depends on what $6 is in. But it's all relative to the time frame we're looking at. And what we're looking at, really. So. Is it bearish? I'm not sure. All right, guys, 2.5 minutes. Well, yeah, you have to subscribe first, and then I think you got to hit join. But I'm not 100% sure. I think once you subscribe, then you click join, and that's how you do it. But you don't have to. You don't get anything extra. You get these coveted emojis, though. Like, look at this. Beardless John. There's a Beardless John. Dovish or hawkish, I'm not sure. Last minute, guys, we got 2 minutes. We got about 3,000 watchers right now. 2 minutes. Let me know if you're hawkish, dovish. Hawkish means the Fed will be pushing for higher interest rates. Dovish means they want to lower interest rates and stimulate the economy. Which one do you think? I don't know. I'm curious what's going to happen around then, though, around January 20th or so. I am deeply curious about what's going to happen then. Bearish, bull, hawk, hawkish, dovish, bull, hawk, dove, neutral, hawk. Yeah, I think they're going to be hawkish as well, but who knows, man? They might be either one. All right, guys, y'all ready? We got 1.5 minutes left. 1.5 minutes. All right, chat, 40 seconds. All right, guys, ready? So, again, we're going to summarize this whole thing live as it happens. We'll see what the market does to us here. All right, guys, you ready? Here we go. Here it is, 10 seconds. The timer's a little bit early. We got 5 seconds left, 5 seconds. Let's watch for market reactions. I'm going to put the SPY up. And then gold. And here's the report live right now. All right, so there's the report. Market so far is reacting negatively to this. Down somewhat here. We got to wait for the report to populate. And, yeah, bear with me. Yep, waiting for the report, guys. Bear with me. All right, you guys ready? Here we go. So, okay, so here we go. We have the full summary. We're gonna break it down now, and we're gonna cover. So far, we've reacted somewhat negatively. We are gonna cover this entire thing, prioritizing the outlook section first here, guys. The outlook section first. And so here we go. Let's do this. All right. So to break everything down here, chat, everything down. Cautious optimism with inflation and growth risks. The Federal Reserve staff projected solid economic growth, but acknowledged uncertainties regarding trade, immigration, and fiscal policy. GDP growth is expected to slow slightly, with unemployment rates remaining close to natural levels. Inflation for 2024 is forecasted slightly higher than previously anticipated due to the upside, but is expected to gradually decline to 2% by 2027. Risks to inflation remain tilted upward, with persistent core inflation. Oh no, wait. Let me make sure. Yes, this is correct. So again, it's expected to gradually decline to 2% by 2027. Risks to inflation remain tilted upward, with persistent core inflation and potential trade policy impacts acting as key contributors. The staff emphasized a balanced risk approach, noting that labor markets are unlikely to create significant inflationary pressure. Despite steady growth, participants expressed concerns about geopolitical developments, trade adjustments, and market optimism, all of which could affect inflation or economic performance. The committee plans to gradually ease policy as inflation stabilizes, but remains prepared to adjust as necessary should economic conditions shift. All right, so that's the first set of it. Again, we're still looking at outlook, financial markets and operations, stable rates with easing expectations in 2025. Treasury yields increased slightly, driven by real yields, but liquidity remained within historical norms. Equity markets sustained gains post-election, and inflation expectations showed no signs of long-term pressure. Market participants almost fully priced in a 25 basis point cut last meeting, with slower cuts anticipated in 2025. So they're expecting about 75 basis points total of cuts this year in 2025, according to the last FOMC meeting. Balance sheet runoff is now projected to end by June of this year in 2025, reflecting adjustments in expectations. Internationally, foreign central banks are forecasted to ease policy rates, widening the gap between U.S. and global rates, contributing to a strong dollar. Repo and reserve markets remain stable with adequate preparations for year-end pressures. The Federal Reserve also plans to introduce technical rate adjustments and additional repo auctions to support market stability during times of stress. Now, to break down, and we've slightly reacted negatively to this Fed Minutes report. It's not a huge reaction. We've slightly reacted negatively to it. And again, we're currently summarizing this report. We first looked at outlook, which the outlook is now expected at about 75 basis points in cuts for 2025. Inflation still remains a worry, and they think the inflation risks remain tilted upward, with core inflation and potential trade policy impacts acting as key contributors. Basically, tariffs and inflation risks for 2025 is what they're thinking. And again, now we're going to look at the economic situation. Solid growth amid cooling labor markets and inflation progress. So GDP growth remained strong in 2024 with steady gains in domestic consumption and exports. Inflation moderated but remained above target levels at 2.5% PCE and 2.8% core PCE, reflecting gradual progress. Labor market showed gradual easing with job gains slowing and unemployment rising to about 4.2%, yet remaining historically low. Wage growth at 4% annually continued to moderate without signaling wage-driven inflation. Foreign economies showed mixed results with slower growth in major markets like China and Europe, while Latin America experienced inflation pressures. Despite tight monetary policy, optimism about regulatory easing and trade adjustments supported growth sentiments. Risks include rising delinquencies in lower income households and sectors like agricultural struggling with high input costs. We're now going to pivot to the financial situation. Markets reflected a higher path for interest rates. Again, hawkish is what I thought it would be. Markets actually reacting positively now, which is interesting to this. Still very choppy, but we are positively reacting to this. Again, markets reflected a higher path for interest rates influenced by inflation data and economic optimism post-election. Treasury yields initially spiked before stabilizing while inflation expectations stayed anchored. Equities and cyclical stocks gained, supported by profit expectations, and credit spreads narrowed. Short-term funding markets remained stable and money market funds saw record asset highs. As Treasury bill rates became more attractive, borrowing costs for households and businesses remained elevated but showed minor declines, especially in mortgages, specifically in auto loans as well. Commercial real estate loans rebounded slightly despite delinquencies in office loans. Credit was accessible for most households, although low-income borrowers faced higher delinquencies, particularly in FHA mortgages and credit cards. Businesses reported stable credit access, although small businesses continued to experience, pretty tight lending conditions. The last thing to look at is the policy decision. Again, gradual easing with a 25 basis point cut. The committee voted to lower the federal funds rate by 25 basis points to 4.25% to 4.5%, aiming to sustain economic growth while advancing inflation control. Despite progress, inflation remains above 2%, requiring a cautious policy stance. Most participants supported the cut, though one dissenting vote favored holding rates higher to ensure inflationary pressures are contained. Future rate adjustments will depend on incoming data and inflation trends. The committee reaffirmed its commitment to gradual balance sheet reductions, which is quantitative tightening, technical rate adjustments, and monitoring funding markets to ensure stability. Policy flexibility remains a focus with an emphasis on responding to unexpected inflation risks or economic slowdowns as needed. So far, we have had a positive reaction to this report. And again, just to break this all down one more time, I'm running out of breath now reading this to you. Top 3 fastest reader in the world right now, though. But with that said, again, we did have this report. What I'm seeing right now, again, they're projecting solid economic growth, uncertainties regarding trade from tariff worries from the election and stuff like that, immigration and fiscal policies. GDP growth is expected to slow, unemployment rate remaining close to natural levels. Inflation is forecast slightly higher than previously anticipated due to upside risks. It is expected to gradually decline to 2% by 2027, though. Risk to inflation remain tilted upward. Core inflation, again, tariff and trade policy impacts as key contributors to this risk. Staff emphasized balanced risk, again, noting that labor markets are unlikely to create significant inflation pressure. Despite all this stuff, they expressed concerns about geopolitical developments, trade adjustments, and market optimism, all of which could affect inflation, economic growth. And so, yeah, that's basically what we're looking at right now. Markets actually reacted positively here. It was more hawkish than I thought. You know, they're fearing inflation, which is kind of a hawkish thing. If the economy's really weak, typically we don't see super high inflation as a fear from that because it kind of pivots to the other side. You know, it's a balanced pendulum of economic weakness, inflation, back and forth. But we are showing more inflation fears by Fed members leading into this year. You know, so that's something to watch. And again, the market's actually reacting positively here. We are heading back up now. Very choppy range. You know, I don't know if the market is leading into tomorrow, which is closed. You know, remember, the market is closed tomorrow. Almost all markets are closed, I think. Let me see. Are futures open tomorrow? So I know U.S. markets are closed around Jimmy Carter's funeral. New York Stock Exchange, NASDAQ 100 will fully close their equity and options markets on January 9th. Bond markets are going to be a shortened schedule. So, yeah, everything's closed. Okay, gotcha. And again, so that's the report, guys. Now, again, hit the subscribe button. We're going to cover every major economic report that we have. The Fed meeting is going to be at the end of this month. We are going to stream the entire thing completely live on the stream like we always do. We're an economic reports channel. We also day trade, swing trade, invest live every single weekday morning for free right here. We don't sell a course, don't sell a service. I don't even claim to be a good trader. Remember, guys, do not copy me. I have no freaking idea what I'm talking about. If you copy me, you'll probably lose. I'm one of the top 3 worst traders of all time. I do trade off stream. You're not going to see all my trades. And understand CFTC 4.41, hypothetical or simulated performance, have limitations, guys. With that said, if you want to check out one of my sponsors, I'm on my 4th green day in a row trading on Top Steps funded account program. It's really useful. Like, listen, most day traders lose, right? So if you put up your own money, thousands of dollars trying to day trade, trying to look cool, you're probably just going to lose it. Let's just be real here for a second. If you put up 10, 20, 30 grand, you're going to lose a large chunk of that, most likely, at least. Limit that risk. Try a funded account program. It's a middle ground, right? You're paying $49 a month. Comes with real-time data. They give you a demo account. If you can hit 3K in profit without losing 2K, a 3-to-2 reasonable ratio, they fund you 50K, 90% split, and you get to keep your first 10K. So your risk is $49 for the base one. It's tiny. It's about what it would cost if you were going to pay for a demo account with real-time data anyway. But if you pass it, you get a 50K funded account, 90% split. It kind of gives you some pressure. It's like a game, and it's a middle ground of pressure. And if you're good enough, you can take it and then build up profit once you're funded. Again, you get to keep your first 10K at 90% afterwards, which is similar to funding your own account. And you can then build up profit, withdraw if you're good enough, fund your own account. And if you fail, you're out $50. It's not the end of the world. It's a beautiful middle ground of pressure. You can day trade the S&P, the NASDAQ, the Dow, the Russell, gold, some currencies. And the big edge is that Top Step X has 0 commission. And so there's literally 0 commission in Top Step X. No PDT rule, and futures patterns are super similar to blue chip stocks. Again, I'm one of the top 3 most biased traders ever, of all time, ever in the world, because I get paid by them. And so understand that, chat. I am certainly biased in their favor because I get paid by them. If you want to check them out, though, here's the link. Great way to help support the channel. Everything we do here is free. We get thousands of people here because we cover it reliably. Everybody knows they can tune in here, and we're going to cover something if it's happening. So, yeah. What do you guys think of this? Good news, bad news, bullish, bearish? Market's up a little bit from this report. The report came out right here. I'm going to put the regular NASDAQ up just because it's past some of these levels. Report came out right here. And so far in 11 minutes, 1, 2, 3, 4, 5. Yeah, we've reacted pretty positively. Now we're pulling back. So again, we're pretty choppy though. Like we're a big range right now, so we are in a really large range. Down big, up big, down big, up big, down big, up big. So we're pretty choppy, but again, kind of rectangular here if we look at it. I'm just watching to see if we break out of this range. Now remember, the market is closed tomorrow. But Friday, we have one of the biggest economic reports of the month coming out. It's non-farm payrolls and unemployment. Non-farm payrolls is an incredibly important report right now. Historically, over the last couple weeks, the market has reacted negatively to economic strength reports. Jolt's report showed higher than expected job openings, economic growth. Market negatively reacted to it. Jobless claims numbers showed lower than expected jobless claims, less people filing for unemployment. Market reacted negatively to it. ISM services PMI came out higher than expected, showing a stronger services sector than expected. Market reacted negatively to it. The question is, are we in a backwards land now? Like, are we good as bad, bad as good scenario like we were post-2020 after all the economic stimulus and the quantitative easing that we got to try to save us from the pandemic back in 2022? Are we back to backwards land now where the market is so fearing inflation that they react negatively to economic strength? You know, or does the market just want rate cuts really, really bad? And if they do, anything that signals a stronger economy means less likely that we're going to cut rates and all this stuff. I don't know. I don't know. What do you guys think? Yeah, market's very flat. I think we are due for a correction this year, but I have no freaking idea what I'm talking about. If you copy me, you'll probably lose. I really don't know what we're going to do this year. No idea. But I think market's up 105% on the NASDAQ in the last 2 years. It's a big move. I wouldn't be surprised to see us get a correction. And it's not really at a point in time where I'm interested in buying up heavy long-term investments right now either. So we'll see. Yeah, join our Discord. Completely free. Doesn't cost a penny. So what's expected tomorrow? Let me see. Tomorrow it is expected at, again, non-farm payroll is expected, and that's probably like the biggest report we got this week. Non-farm payroll is expected at 155K. We did have prelim non-farm payroll data earlier today. What did it show up as? It showed up at 122, lower than expected prelim payroll numbers at 122. And then again, the non-farm payrolls report expected at 155 on Friday. Unemployment expected at 4.2%. 4.2%. We'll see what we get, guys. Look at gold. Gold popped up to 2680s, which is pretty, you know, it's like the highest level it's been since early December. Gold has been on a long-term tear, though, really. Let's see. This year, gold has done incredibly well. It's up like 40% or something like that on the year. Gold is up big. NASDAQ's up big. S&P's up big. Dow, I'm pretty sure, is up big as well. For Dow at. Yeah, Dow's up huge on the year too, from 3,800s to 4,500s at one point. Now it's at 4,300s, or 43,000. I mean, yeah, market kind of underwhelmingly reacted. I told people we'd probably underwhelmingly react to this. What do you think about AMD? I'm in AMD, but I'm just kind of sitting tight waiting. And again, if you haven't already, guys, check out Top Step. I'm going to day trade a little bit on here today. Let's try it. We're going to try to day trade a little bit on here today. Let's see if we can find something good. All right, we're going to jump in. Oh my gosh. I accidentally bought the regular NASDAQ here. Ooh. I think I just made money, though. I got out completely flat on that, man. Nerve-wracking. All right, we're going to take 2 contracts of the micro E-mini now. See if we get a move back up here. There we go. And I'm out. Just made $25 there in about 2 seconds. And this is day trading futures. There's no PDT rule in futures. I can day trade the S&P, the NASDAQ, the Dow. Again, this is my 4th green day in a row. The patterns are very similar to blue chip stock patterns. No PDT restrictions, so I can day trade the S&P, the NASDAQ, the Dow, the Russell Gold. I'm trading the NQ right now, or the micro NQ, which is the QQQ price action in futures. Top Step gives you a demo, test your skill with it. It's a beautiful middle ground. Most day traders lose. And so I'm always preaching it because it's just useful. When I first got started, I tried to day trade stocks. I needed 25K. I ended up putting up like 5K. Lost thousands of dollars in weeks. And so if I would have had something like this, I would have certainly lost less money, in my opinion. And again, they give you a demo, test your skill. Here is the website for it. Wait, now what? Top Step X. Yeah. Yeah, so here's topstep.com. You can see they've paid out over $180 million since 2020. They've funded almost 90,000 accounts. They've been around for over 12 years. Again, they give you a 50K demo. You can make this profit target without losing this first with 5 contracts max, which is plenty. And you can also trade more micros than this as well. They fund you 50K, 90% split. A lot of huge edges. Like, it helps build your skill in day trading. It really does. They have a bunch of sources. Coach T will like tell you where you're doing stuff wrong. Great community. Tons of like courses and stuff like that you can use to watch. Just incredibly powerful thing. And again, most day traders lose. If you were going to pay for a demo account, it'd probably cost about the same as this if you get real-time data with it. So again, if you want to learn to day trade, I would never fund thousands of dollars in my own account. I would demo account or use this because this is the right way to do it. But again, I'm biased. I get paid by them, but incredibly useful, incredibly useful. And again, if you sign up, use Top Step X. This is Top Step X. They use Trading View charts, tons of tools. Like you can see my list of trades. 0 commission here, 0 commission. So pretty useful. Again, my recent strategy is I've been trying to find good risk reward spots. I'm going to short here and then maybe add 1 contract to it. We'll hold the rest break even now. I don't know if I like this anymore. We're flat right now. I want to be patient with it. We got a risk level right above me that we're using. We are green on the day. I'm currently green on this as well, but it's taking a little bit of time, 15 seconds. I'm going to cut that. I don't like that move. So we got out for a small loss there, $3. Still green on the day. Yeah, we're up. I think we could have made money on that trade too. I should have got it. But you can see how similar it is to day trading stocks. Very similar. 10-year yields getting crushed. Are they really down? I would assume 10 years are going up because this was a hawkish thing by the Fed. They're not getting crushed. Like, look, so here's 10-year yields. Now, to understand this, guys, I talked about this morning. 10-year yields, or yields in general, are going to have a positive correlation with interest rates. And so if we get some type of economic report that signals higher interest rates, 10-year yields will probably go up from it. It's one of the reasons, like, we had, look at 10-year yields since the last Fed meeting. Because basically in the last Fed meeting, they made it pretty clear that they wanted to pause rates the next one, which means higher interest rates. It means rates aren't going to be going down. They're going to be more hawkish. And so what has happened to yields since then? They've gone up big, right? They've gone up big. Not a shock. Anything that signals higher interest rates or hawkish stance by the Fed will make the yields rise and the underlying prices of the bonds fall, if that makes sense, just to understand the logic of it. geopolitical tensions and economic expansion to cut rates even further than expected, putting more money in circulation. I don't know, man. It depends on what. Honestly, it really depends on what you. If you want to know what they're gonna do, you gotta watch inflation. You gotta watch inflation, right? Inflation is what you want to pay attention to, because inflation will guide what the market fears. If inflation comes in really hot, the market fears inflation, and the Fed is more likely to be hawkish and raise rates or pause rates. If the economic projections or the economic data comes in weak, like say we get payroll numbers coming in 75% lower than expectations or something like that, that's much more dovish thing. That means that the Fed is much more likely to try to save us from that weak economy by lowering interest rates and stimulating the market, stimulating the economy in that regard, right? Like if we get economic weakness, the Fed wants to avoid recessions, depressions. We get GDP coming in way lower than expected, the Fed's more likely to cut interest rates and bring them back down. And so recently the Fed's been very data dependent, like they kind of always are, but yeah, if you want to see the probabilities in the rate decisions, right now it's 95.5 for the CME watch tool. If you want to see that change, watch the economic reports. Yeah, again, we're currently at 95.5 for rate decisions. So 95.5, you can kind of see all that stuff here. And so yeah, pretty probable we're going to pause next month, or at the end of this month so far. Ten-year looking sketch. Well, it's just the 10-year. It's gonna move. It's up a lot based off of hawkish Fed, is what it is. But yeah. All right, guys. But I think that's it for me today. I think I'm gonna cut out of here. Y'all have a great day. I'll see you guys later. Y'all be good. Again, tomorrow markets are closed. I'm honestly gonna sleep in, guys. I'm sorry, but listen, the markets are closed. I'm gonna sleep in tomorrow. I'm going to sleep in. I'm definitely not going to be waking up early. At least I'm going to try. I say that. I'll be up at the freaking crack of dawn. Let me know what you're going to do tomorrow. I'm getting out of here. I'm going to try to enjoy a day off, even though at this point my brain is programmed to get up at the crack of dawn no matter what, regardless of whether I work or not. But I'm going to try to sleep in. I love you all. You'll have a great day tomorrow. I'm kind of excited, to be honest. I'm going to take the day off, hang out with the family, and yeah. Relax. I'll see you guys Friday. Listen, Friday, non-farm payrolls, unemployment data. Be ready. I love you all. You'll have a great day. I'll see you guys later.